Traders, Anthony here. I sent an Aussie dollar trade idea into VIP a few moments ago. What I want to do with this video is run through some technical analysis and explain the idea so that you understand the trading plan, the strategy, everything behind this setup. And with that, let's get into the video. Guys, we're going to start off with currency strength. As you can see here, this is the Australian dollar currency index up the top. Down the bottom, we've got the DXY, the US dollar index weekly chart. Have a look at the trajectory. This is really important when you're considering a trade opportunity. The Aussie is definitely heading south. The US dollar index, we've had this reversal and it's heading north. This is the weekly chart. But look at this price action. And I mean, yes, it can continue, but what's got me concerned is it's moved down into this key level here, and the fact that we've got this gap above, so we could possibly see a retrace here just to collect liquidity basically before another leg down. And with the dollar, look at this move, it's overextended. We can see bearish pressure coming in, and I mean, look, we've got levels through here, a pullback down in before we see it continue on its merry way. Makes a lot of sense. This retrace on the Aussie and the retrace on the with the DXY is something we need to factor in. So let's just go down to the daily now. That's the weekly. Have a look at the daily, get a bit closer to it. Right, the Aussie above, look at this. Okay, so we've had a bit of a retrace. That could be enough. But what's got me interested is this lower high here and lower low. Bit of a break here. So just be careful, there's a little bit of weakness coming into this. Possibly it could trade south or it could pick up, but you know, look at this price action. It's a bit different to, you know, what we've been seeing, and then we get this lower high, lower low. So I'm a little bit cautious. That's why I'm setting up a limit order rather than going in at the market. Now have a look at the stock markets. Daily time frame, look at these. These are all overextended from last week, trading into big liquidity pools. Liquidity pool. See that? Once it hits these big liquidity pools, we can expect a bit of a retrace. Same thing with the VIX. Possibly it retraces before we see it continue. Now, the US dollar would be strong when we see the stock markets heading south as money pours into risk-off assets and currencies, but if we see this pull back, well, we could expect a little bit of weakness come into the dollar, hence a potential retrace. Hope that makes sense. Now, cast your eyes upon our trusty currency strength indicator. Let's just pull this one up here. I'll double click and open it up. This is just an indicator on a chart, right? And what I've done is then double click it and it isolates these currencies. Red is the dollar. You can open that up, check it out. There's your colors. Now, let's just take it out to the monthly, because what you want to do is get a bit of an idea on the higher time frame what the what the banks are doing. And at the moment, the dollar is been trading sideways, but it's kind of heading north here. The pound, which is this yellow one, has crossed to the downside. This orange is the euro. So see how it's been heading south for a while. You want to look at the history here. Let's just go to the weekly. Check out the trajectory, the dollar, okay, from way back. That's strong, that's red. The euro, orange, from way back. And the pound is yellow. Look at that, right? So you can see that the banks are invested in the dollar long, and they're selling the euro and the pound. The Aussie's had a bit of a thing, and now it's kind of winding down. The Aussie's blue. So it's really important to consider the strength of these currencies. In this case, then, you want to buy into strength and sell into weakness. So, you know, the pound, dollar, euro dollar, Aussie dollar, it's all a sell. Canadian dollar, that's heading south. But you want to factor in these potential pullbacks. So let's just quickly have a look at this. See, this is the thing. Monthly time frame, look what it's trading into. This is big liquidity under here on the monthly. And you're going to see this pattern repeat over and over again. Under here, okay, from the body down to the candle, big liquidity pool, monthly. Look at this. And you got this distribution level back up in here. Grab the body if you like. Monthly distribution. So you want to plan your trades around, what's going on here. Now, I want to be bearish, given that this is definitely a bearish market. However, I mean, look, we are, see this line here, this is on our indicator, this is one deviation out from the mean. So that makes sense to me. That's the monthly. So a possible pullback. How far? And look, remember that the market's a fractal. If we're looking to short this on the lower time frame, understand that the monthly could pull back, so there's more risk involved. So let's just grab a couple of levels here. Look, we take these lows. That's a very big level on the monthly time frame. So we'll go level monthly, mark these up, and then on the lower time frame we have a reference. We've got, this is my liquidity pool indicator. So it's tapping into that, and then from there we've got these 2 monthly points of interest marked up. Let's go down now. This is our top-down analysis. What have we got here? So that's our higher time frame. Now on the weekly, look what's going on here. It's tapping into liquidity under here. Always got to look and see what the market's doing, where it's tapping into liquidity, and where is there resting liquidity. Right, it's already tapped into this. So I'm thinking, Aussie dollar, if I'm going to get short with this, it's going to be on the weekly time frame. We've got this level back up in here. We could mark the high of that. All right, so now understand the risk here. Level weekly, right? There's a pullback. There's a potential entry point on the weekly. But understand that we've traded away from this level here on the monthly. And that this gap in through here to here, is a potential risk. Understand that. So we take a trade on the lower time frame, stop above here. All right, don't underestimate how far this thing can, look at it, can all of a sudden move. Okay, so that's what you want to take into consideration. So this is why we always go in with a conservative position size across the board, because sometimes these will get taken out if smart money decides to be aggressive and look for, reach for some of these higher levels. Anyway, with that in mind, I would trade this from this perspective here. I'd look for a short, retrace back in. Look, grab your fib. We've got a trend here on the weekly. That's fine. Pull it from the high down to the low, swing high, swing low, the 61.8 fib, pull back. We've done the fib retrace, short position. I would go a limit order in here. Right, now notice what we've got with our indicators. Look at this. See this white line? This is a monthly, previous monthly level. It picks up previous monthly highs and lows. Big level, guys. So let's just mark that level monthly. So that's big resistance, right? We could consider that that would be a valid level above these highs for a stop loss. The weekly time frame, pull back up, right? So that's that. And understand, like I mentioned, yeah, look, this can get taken out. We've got this range in here that smart money could all of a sudden, look at this, see, pull back here. It doesn't trade down. Look what they do. They take it up. Every now and again, this is going to happen. But if you look back in the trend, more often than not, these setups work out. I'll show you that. Look, let's just grab a pencil here. I don't know. Look, high to low, it worked. Yeah, that worked. That worked. Stop loss up here. That worked. Stop loss above. And that, you get taken out. But more often than not, these are going to play out quite nicely. And again, it's fractal. So when you go down the lower time frames, you could be in and out of the market without any issues at all on the daily, on the 4 hour, etc. So that's my weekly setup. Now, target, always look for where there's liquidity. Okay, so that's a level under here to target. The market's going to react off here. These sell stops under here, that will push this back. So, we get retrace, a leg down, retrace, a leg down, retrace, a leg down. That's what you want to consider. And then where's your ultimate target? Well, look down in here. This is, have a look at this equal low thing here. And under here, we've got these wicks. That's another target level where there's resting liquidity right through there. All right. So ultimately, I mean, that's your target. So then let's build some positions. If this continues, hopefully we get a few in here, and then we can enjoy the ride. So that's the weekly. So let's just go down and have a look at this on now the daily. And it's the same thing. You want to set up a small position here on the weekly and a small position here on the daily. Look, this could roll over here as well. So you want to consider a daily opportunity. You've got this range, low to high, lower low to this high. Yeah, all right. Where would you enter on a daily time frame? And now we understand that there's risk potentially resting above here, but we've got this daily trend. So we can set up a limit sell up here, small position, guys. And then we can set up, have a look at this. What have we got? We've got this range from this high to low here. We've had the fib pullback. This hasn't really tapped under yet. It hasn't cleaned out liquidity under these lows yet. So that it's fractal. See, we've got the leg retraced, leg down, retrace, leg down, retrace. This is all happening on the lower time frame as well. Leg down, it hasn't really pushed down under here, retrace. On a daily time frame, I would be inclined to, you could see this orange line. This is a weekly. So you could set up at the base of this distribution here. That could be a thing on the daily time frame. Where do you want to go with that? Above this weekly, or you could take it up a little higher. Just keep your position size small. So there's an idea on the daily. Now we understand that on the higher time frame, this could do that. It could trade all the way back up. So there's risk involved. So you always keep your position size conservative. But here's the thing, look, it's fractal. The market's bearish. On the daily, look, leg down, retrace, enter short, leg down, retrace, enter short, leg down. You know what I'm saying? So you could have been trading all of this. Win, 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 win. Then sometime, at some stage, we're going to get wiped out. And that's the risk. It'll happen every now and again, but how many trades did we get away with? You know what I mean? Okay, so keep that in mind and understand the risk and trade carefully with small position sizes. We've got a weekly, we've got a daily, and 4 hour. I think, look, given the fact that the market could retrace, I'm inclined to, that's risky. I wouldn't want to go short any lower than that. So at least, that's a setup that we can run with at this point. Monday, I'm always expecting this thing to take out stops, to head up in here and clean up some stop losses before we see another leg down. All right. Think about the Monday candle that I'm always drawing, the Monday weekly candle. Let's have a look at it. What happens on the weekly candle? It opens short, look, and then they spike it up, and then we get the week. It opens short, they spike it up, and then we get the red week. This one was a bit of a bullish, but then we had a lot of bearish, If it trades back up here, expect that. Now, VIP will give you precise entries and trades that I'm taking on my live account or one of my live accounts. Click the link below, go to the website, join VIP, show me fish and chips once a month, and consider the investment. All right, have a great day, safe trading, see you in the next one.